Good day. I'm Martin Gagel with Market Radius Research. It's Friday, February the 11th, and we've got CEO Gord Breese of Katipult joining us. Katipult has developed a cloud-based workflow platform for the investment industry. I'm meeting with Katipult today because I've been following the company and management for years. I've always thought their solution made a whole lot of sense, and they've built an excellent board of directors and management team. While it's always a bit slow when you're building a book of SaaS revenue and business, their cadence of deals seems to have improved last year, and I'm trying to get a better understanding for what 2022 and beyond could look like. With a solid balance sheet, I'm trying to figure out what they can accomplish in the coming quarters and the coming years. But please remember, this is neither a recommendation nor investment advice. We're here to learn about the company. Gord, thanks a lot for joining us today, and let's hear about Katipult.
Hey, Martin, great to be here. Thank you very much. And I really appreciate the opportunity to share the Katipult story. I'm going to share a presentation here that's available on our website. So if anybody wants to download the investor proposition and deck, feel free to do so. And we're going to make this interactive, and would love to be in a position to better inform the audience and yourself, Martin, about the great things we're doing at Katipult. So who are we? As you mentioned, we've built a SaaS platform for the investment industry. And that puts us in the category as being a fintech company. We provide a solution that automates the full end-to-end workflow in around private capital. And I'll get into the details of our strategy, what we're doing and why. But today we have a global footprint, both in terms of customers and employees. We have a center of gravity of a team based in Western Canada, augmented by a development facility and center in Eastern Europe. To date, our customers have used the Katipult platform to transact almost $3 billion in private capital deals. One of the strengths that we have with a global customer base is we figured out how to provide this solution to complement and augment the various regulations and regulatory frameworks that our customers have, in their various markets. 35 customers today. We've got an employee base of about 44 people, and would love to share with you a little bit more about our strategy and plans. So,
Gord,
go ahead.
I just started, not really a question, but a comment. Like $3 billion, that's a lot of money that's gone through your system, but also that's just a tiny fraction of the global capital flows in that. So implying you're at the starting game and you've just got a very small slice of the pie, and there's a whole lot more pie to eat.
Yeah, let's talk about that pie. This slide kind of gives you a bit of a snapshot to identify, how big is this market? What does this look like? And the space that we are focused on is the private capital space. So the public markets, very mature, lots of legacy infrastructure to support those deals. The market that we're focused on is around the alternative investment space, or the private capital space. McKinsey estimates that this is north of $1 trillion in global deal flow. It's a market that really is stuck in a manual workflow, telephone calls, emails, Excel spreadsheets. It's really at its embryonic phase in terms of the digital revolution landing on its shores, and that for us is really the market opportunity. It's what our customers rely on us for today, and we're excited about expanding that base of customers and really providing more innovation in this market, in this space.
I'm getting, a couple of years ago, DocuSign went public, and it was a fairly big IPO, and that's the whole part of the transition from analog, actually signing a piece of paper with a pen, to doing it digitally. But I do not believe they have sort of the whole workflow. Hey, this is it signs here and it goes through these whole systems of things. And that's sort of, to maybe jump ahead here, but that's kind of what you're doing.
Well, that's part of it, certainly,
Yeah.
Martin. The digital signature technology from players like DocuSign, that's in our view, a very important, but in their case, a very horizontal utility. And when we talk to customers today, many of them have started to digitize their operations. They've dabbled a little bit in things like digital signatures from vendors like DocuSign. We've taken an approach that said we want to purpose build a platform specifically to solve not only the signature challenge, but the whole end-to-end process of introducing alternative investment deals to the marketplace, sharing those details with investors, onboarding investors, and bringing them through and across that whole journey to deal close. And that's really been the focus for Katipult. We've seen an acceleration and a higher level of interest in that full digital process as a result of COVID, for sure. So again, this is the segment we're focused on. We see a significant opportunity here. Largely, it is, as you've indicated, massive market opportunity, relatively untapped in terms of digital services and really modern software to support this whole process. Let's talk a little bit about some of those customers you mentioned. We've seen certainly in 2022 a very strong adoption of the platform. So companies like Cormark Securities in Canada, Canaccord Genuity, ATB, the TMX, and Raymond James. And Raymond James in particular is an important customer for us, because that is an organization based in the US. It's not their Canadian subsidiary that's using the Katipult solution. It's really their US operations. And as we will talk about, the opportunity for Katipult is to take our base that we have established here in Canada, a foothold in the US, and really accelerate the expansion and the adoption of our customer base going forward. Couple of important and proud feedback from our customers that I'm sharing with you here. It's really about driving that operational efficiency, giving investors a better, stronger digital experience. It's more convenient for them, enabling them to sign and participate in these deals on any device at any time, anywhere, as opposed to worrying about getting emails with PDFs and having to print those out, sign them, fax them, et cetera. So again, that's part of our value proposition and our solution, but there's a much broader set of capabilities that we bring to the market. So I'll talk a little bit about the size of the market and how we look at the market opportunity and how we're focused on expanding our footprint. So I mentioned our business in Canada. I mentioned the size of the US market. It is about half of the global market for alternative investment structures, and deal flow is in the US. Those are two market segments that we're pointed at, building our go-to-market plan and looking to expand our customer base in Canada, the US, and also around additional services that we can provide our customers as they adopt the Katipult platform. And I'll share with you some of the ideas and some of the capabilities that we're working on there. Today, we deliver services that drive revenue for us on things like KYC, which is really modern digital investor ID verification services, payment.
Sorry, Gord. And for those who don't know, KYC means know your client. These are the forms that brokers have to fill out when you're signing up a new client, like where you live, your income, and 20 pages of this and that.
Thank you, Martin. Absolutely. And a lot of that is driven around the regulatory compliance framework that investment banks and our customers have to operate in. So one of the advantages we bring to the table for our customers is a rigorous, bulletproof compliance framework that enables every step of that investor onboarding and the deal flow process to ensure that meets government requirements for how deal flow happens in the market. So I talk about network services. These are capabilities that we're going to be delivering to our customers over time, and that provides an incremental revenue stream for the company and provides more value to our customers, in their life cycle and adoption of Katipult.
So these are your addressable markets: the Canadian, US, and network services. I don't understand what you mean by is that like a product offering network services, or what do you mean by that?
Yeah, no, it's really a layered set of, so maybe I can take a step back. So when an organization like Canaccord Genuity or Raymond James, decides to deploy Katipult, we go through a customer journey and an onboarding process. We earn revenue through a subscription license agreement for that service. We provide them the core platform. In addition to the use of our software and the core platform, there are opportunities to create a set of additional services that enable these dealers to connect to each other and co-participate in alternative or private placement type deals. So,
you mean like when you're managing a syndication and that, okay, these guys are putting in so much money in those, and make sure everyone's done their stuff and it all works? Is that roughly what it is?
Exactly. Okay. So, well, the first iteration of our technology and our product is really centered around the investment bank process, their internal process, how they work with investors, how their compliance team uses the product to ensure that the subscription documents coming in are clean, error-free, meet the requirements, et cetera. We're now enabling our customers to connect their systems together. So that's what we mean by network services, and we really see that as an additional leg or pillar in terms of the revenue and service opportunity that we see in front of us in the market. So that's why we've distinctly called it out as network services. It complements the systems that our customers use today, and it gives us more creative opportunities to add value to the entire ecosystem around these alternative investments. And what I mean by that is it's more than just individual investors, issuers, or organizations looking to raise capital, and the investment banking participants in capital deal flow. It's also legal firms, so organizations that are creating the digital subscription documents from the get-go and making those available to their issuers. So that's what we mean by the network, and I'll dig into that a little bit more and explain our vision for that.
And you referred to like the Canadian and US equity markets, and I think you like the alternative or private kind of markets. And I think what you're getting at with that, if I phone up my broker and say, buy 100 shares of Microsoft or whatever, you don't get involved in that kind of transaction. But when I phone up my broker for the first time and say, hey, I'd like to open up an account, you would get involved with that in sort of the KYC, know your client side. Or if there's a private placement or something that kind of requires signatures and make sure you've got a certain net worth, that's where, even though it could be on a publicly traded company, it needs the paperwork and the compliance stuff on the back end to make it work.
Absolutely correct. So you're calling out the alternative or the private capital space, which is quite distinct from the public market activity. Where you trade securities through an exchange. So the trading and the investment workflow is quite distinct and unique, and that's the primary focal point that we've leaned into and built our platform to accommodate. I'll just touch on the investor onboarding. we really focus on that in the context of these private capital deals. So a private placement type transaction. We don't see ourselves as a standalone investor onboarding system. We build that in the context of the private capital space.
Great, thanks for that clarification.
So our vision for the platform when we embarked on building this was really this notion or concept that we call the operating system for private placements, because it's not just, as I mentioned, for a single organization. There's a framework or a value chain with various participants, from investors, compliance teams, the equity capital markets teams within an organization. There's the law firms involved as well. But the platform today provides that complete, workflow process, from investor onboarding, deal management, the notion of syndicating a deal, inviting other participants, book building, the document signing piece that we've touched on already with respect to e-signatures, ticketing, to the back office systems. There is some integration that we engage in. Most of the larger established investment banks and broker dealers have some legacy systems. That's one of the strengths of the Katipult platform. It's a very open technology. We've got a lot of experience in being able to connect to some of those legacy systems that most organizations have today, and then right through to deal close. So that full investment workflow is completely digitized. A powerful user experience for everybody involved in that end-to-end process.
Yeah, and I used to work for many years in the investment industry, and when I participated in private placements, or like they email you the docs, you fill it out, you forget to sign one area, or you forget to put a name in, they email it back. The assistants or the back office people have stacks of papers around their desks and on the floors, and they're trying to make sure, and last minute there's a scramble of, okay, has everyone filled it out? Well, what happened to this guy's docs? We're closing tomorrow. And it's shockingly like 1985.
It's funny. I joined the company 2 years ago, Martin, and prior to that, I've got a pretty long and extensive career in the software business, in the enterprise space, with companies like Oracle and SAP. And what was interesting for me is the discovery in this market segment about how frankly old and inefficient some of the processes are. And this is a segment that is that largely has been forgotten by software companies. It's a distinct market segment with unique problems and unique challenges. And we saw this as an opportunity to really be razor focused on solving for the inefficiencies that you've talked about. Today, when we talk to new prospects and early stage customers, they are caught in a pretty thick myriad of missed documents that have been incorrectly filled in. Some of these subscription documents, as you probably recall, Martin, are 50, 60, 70 pages. It's easy for investors to incorrectly initial or check the wrong box. Katipult has figured this problem out, solved for it, and provide a very seamless experience for investors to take those documents, have a guided way to go through them. There's no room for error, because we take that investor profile and match it to the subscription document. So it's a guided process to ensure that there aren't any compliance issues that teams have to chase down afterwards.
I'm curious if like there are sort of, let's call them old school investors who maybe still use fax machines and they like the pen and paper. Does your system accommodate where whatever, the 80-year-old client fills in the document, faxes it over, and then the person can still sort of use that to integrate the existing technology. And then there are the guys who do all the digital stuff and incorporate it that way.
Absolutely. We've provided kind of off ramps in the process for investors that do want to, have a document emailed to them. They do want to have it printed out, scanned. We can incorporate that, provide them an off ramp for more of a manual experience, and then an on ramp to take those documents and put them back into the Katipult platform. And I think it is a generational thing. One of the more interesting parts of our experience with our customers is that it's not just solving for the pre-existing process that was highly manual. It's really that investors today are more demanding. They are expecting their brokers and their banks to provide them a richer, more compelling, easier investor experience. So it's not just solving for the pain of the past. It's about meeting the expectations and demands for investors. And I would say the same holds true for the financial advisor and the investment advisor community. You're probably aware that it's a competitive market for broker dealers to retain and attract high quality investment advisors who carry, in many cases, very large books of investor assets. So it's really incumbent upon our customers to provide really modern digital tools to enable their investment advisors to do their work, to serve their clients in really a modern, fully digital experience.
And I'm just circling back to the comment you made prior to this I think one of the reasons why people probably haven't targeted the market that you're in right now is because most people don't understand that. And a lot of software guys are like, oh, my calendar's not working or something really obvious. And you need a huge domain expertise to try to get into the back office, figure out what it's going on, and connect all the docs. And frankly, it's hard. It's not, the coding is hard, but trying to figure out the workflows and the people flows and all that makes it, I would think, quite a challenging process to solve.
It does indeed, Martin. And it is, the rules governing exemptions, for example, the various investment vehicles, the profiles of participating and eligible investors, it's not an easy problem to solve. And frankly, it's not like, we found the very best and brightest in this market to build this. One of the things we've done is we've partnered very deeply with our customers, to build the platform. So it is absolutely optimized to solve their real world problems. So, we pride ourselves in having what I would call a co-innovation relationship with our customers. That's why, Canaccord Genuity, for example, one of our earliest customers to use the Katipult platform, we continue to work very closely with them to build enhancements to the product, to fine tune it, and to make it very valuable to not only them but broadly across the market. And it's frankly one of the reasons why they decided to make an investment in Katipult and be part of our journey to build a great business together.
All right.
Okay, I promised to talk a little bit about this notion of a network. We have announced what we call the Katipult Mesh Network. We've also secured federal government funding to help support and fund this new innovation. We're excited about it. We are working with our customers to build this digital network that enables even more free flow, a smoother, more efficient private capital markets in Canada, in the US, and around the world. And so we've called it Katipult Mesh. And it's basically a digital cloud infrastructure that enables a dealer to one dealer to launch a deal on a Katipult platform and expose it across a network of other participating dealers. So today, Cormark, Raymond James, Echelon, Canaccord Genuity are all Katipult customers. They will be using the mesh network to share and co-syndicate on deals. And we believe everybody wins in this new kind of vision of where we're going. Investors have access to more deals. Dealers have the ability to participate and work together in a much more seamless, much more efficient process. Issuers who are looking to raise capital, get exposure to a broader market. We think that this creates a highly efficient, healthy private capital ecosystem. And we're proud and excited to be one of the innovators in driving this vision forward.
I'm thinking when you're, let's say Canaccord's leading a deal and they're doing a syndication of it, that, okay, you're also working with Cormark and Raymond James and Echelon, and they've got the system installed. The data flow between your system and their system is pretty seamless. Let's say it's like you're kind of one big mesh, as you say. But then if you're in a company that isn't running on a Katipult system, you do add some, like you provide maybe a portal or some information, so it simplifies their system as well, not to the same extent as the other guys, but it gives them sort of a way to work through it. And I'm guessing it's probably a really good advertisement for them to go, holy crap, look at this great system, and if we had it as well, that would really smooth things out.
Indeed. You know, what it provides is, as you mentioned, it gives us an opportunity to expose the Katipult platform to organizations that aren't necessarily customers today. We give them a simple on-ramp that if they want to achieve, you know, some of the middle and back office efficiencies that we deliver for our customers that have deployed the full end-to-end Katipult system, you know, we can introduce it to them. Bring them on board, and you know, ideally give them, you know, a sense of value and the capabilities that we can provide an organization that, you know, isn't using the Katipult platform today. So yeah, we're excited about this. We think it's a turning point in the private capital market space. You know, we're partnering with our customers, organizations like the TMX, to expand our vision for, you know, how broad and bold this can get to.
And is this product, is Mesh been launched already, or is it in an early, call it beta or an MVP level, or where are we on its development?
Yeah, great question. We are working with a handful of customers on a proof of concept, refining it, developing it, ensuring it you know, meets their requirements. Security and integrity of the data are really important elements that you know, we've invested into and want to make sure that this is a secure platform and a process for everybody involved in the deal flow process. And I will say that one of the things that we're very proud of is the work we've done around data security and reliability. You can imagine that these organizations have very high standards with respect to ensuring their investor data, issuer data is protected and secure. You know, it's one of the things that we've invested in to ensure that we have a world-class platform for that. We partner very extensively with Amazon Web Services, AWS, leveraging their capabilities and their security protocols as we deliver this. Yeah, so we are in the early stages of Mesh for sure, but you know, we'll continue to innovate and deliver that to our customers through 2022.
And when do you like, when do you expect to, let's say, syndicate your first deal on the platform, ballpark, like by quarter or?
Yeah, we see this being in market at the end of the second quarter this year.
Okay.
So by Q3, we foresee the ability to provide that service and look for a way to start to build our network services revenue and expand them through Katipult Mesh.
Gotcha. And then sorry, going back to your original product, like that's been out in the market for several years. How, like you're obviously any software, like you find new uses, improvements and so forth. How well developed is it at this point? Is it like a mature product with sort of adding enhancements, or is it still a bit of a junior, or where are we in that development?
I would classify it as being a robust, mature product for the private placement subscription process of launching a deal, making that deal, distributing the deal to investors, driving it through compliance. There are other add-ons that we've recently built. So things like more advanced book building and allocation management. So taking, how much of the deal is available, how that's going to be allocated. And, Martin, you recall in your days, if there's a strong demand for a particular issue, there are business rules around how you fulfill that demand. So that's a newer piece of our product that we built. And so we still see, lots of room for innovation in the core platform. I would say that, far from being mature in legacy, there are additional capabilities, workflow enhancements, expansion opportunities for us in that market. So yeah, we'll continue to work with our tier one customers as we bring on more customers. We'll look for ways to build more value into the product to deliver to those customers as well.
Right. Thank you.
So yeah, so excited about the Katipult Mesh Network. And really the story that we love about this business is as an enterprise or B2B software as a service business. Once you begin to drive that revenue traction and build, a larger base of customers, you enjoy very, very strong, healthy margins. So, we've released our most recent results are for Q3 of 2021. We'll be releasing our Q4 results in April as a public company. We've enjoyed strong margins to date. We continue to foresee having a healthy margin in the business and ensure that, as we add customers, as we grow our revenue, we'll drive, meaningful returns back to the business. So we love this business. We love the recurring nature of subscription business, especially in organizations like investment banks and brokerages and dealers. They rely on this as a core piece of their workflow. It's a very sticky product. And I mentioned we see an incremental opportunity to add on additional services to that product as well.
Well, I could like with being sticky, like once if the service is working well in that, I kind of like trying to rip that out and then put someone else's system in would be very challenging, and there I would presume a lot of reluctance upon that, and then the company would get reliable and never go back to the way it was if things are working. Can you talk about like, because it is like it really impacts the way a company manages some of their workflow, and while they may not like it, they're used to it, and then trying to put in a new system create all sorts of disruptions, and it's just one more sort of headache on them as much benefits as it could be. I would think the sales cycle is kind of long. You really need to build a lot of confidence in them. I'm guessing your first customers were the hardest, and now you've got Raymond James and Canaccord on it. Those are pretty marquee clients. There's a lot better confidence. But could you talk about the sales cycle, how that takes, and then how long the whole onboarding process that's required?
Sure. Yeah, it is a non-trivial customer journey, definitely. Building the confidence, demonstrating the capabilities of the product, providing a level of confidence that this will be valuable to their businesses. That's an important part of our go-to-market and our sales process. And I will say that in a lot of these organizations, they've been entrenched in this sort of manual workflow, with a lot of people involved in the back office, the syndication teams, the ECM teams, the compliance teams. They're a big part of our customer journey and onboarding is change management, is working with our customers to think of how they are going to run their businesses in the private capital, private placement space, where they will how they will deploy the technology, training people, et cetera, in some cases connecting to legacy data systems. So it is a process that from start to finish, anywhere from 60 to 90 days in terms of bringing a customer on board. We are working to try and shrink that down, providing better tools to ensure that our customer journeys are efficient, that they get more immediate value quicker out of the platform. But again, a part of this is working with them on re-engineering how they do things. And we've gained a lot of experience with our early customers in how to best do that. So we'll continue to refine that onboarding process.
And with the sales, the revenues themselves, do you charge an initial sort of implementation fee, and then there's a monthly, and then there's the recurring fee? And is the recurring fee just, what's it kind of based on? How many deals go through? Is it a per deal transaction? How many brokers or users there are of it, or what are sort of the drivers of the revenue per client?
Sure. So I'll tackle the first question with respect to implement. I think you called it an implementation fee. We do have a service for customers that want to or need to integrate to, let's say, a legacy investor database. Most of the mature investment banks that we work with have legacy systems, things like IMS, older IBM database technologies. So in those cases, we do provide an integration fee. So we provide a service to ensure that we map the data from their core system, so it flows into Katipult in a way that our platform can recognize and operate that investor data, for example. So in some cases, though, some customers, that's not a problem that they're looking to solve. They're really just looking to drive issuer-led deals, where the issuer has a set of investors that they will target the system. So it really depends on the client scenario in terms of whether or not there's an integration fee. Now, with respect to how we license the software, we provide a set of modules. So customers are charged if they want to, for example, have our robust investor onboarding system. If they want book building and allocation management, if they just are looking for the core system for subscription document management and private alternative investment workflow. So we charge by module. We have where the variable pricing comes into play is when we provide additional services. And those are typically, based on deal flow and deal activity, not necessarily, the number of investment advisors or, the number of deal flows. So we've embarked on this path. We think that the market is very accommodating and accepting of this model. It aligns with typically how these banks and these companies buy other business software or enterprise software. So it provides that predictability for us as well. Okay, so let's talk a little bit about the profile of the team. We've built a very strong leadership team. We've got people with financial fintech experience. We've got folks from the market, from the industry. Our CTO, our head of sales, VP of product, and our CFO all have very strong financial services backgrounds. This is an important part of the Katipult story, is the leadership strength, and I'm proud to work with this group as we build our business and serve our customers. You also, I think, mentioned our board. We have our board chair is Brian Craig. Brian is the former CEO of Solium Capital. Solium Capital was a fintech company focused on the cap table management space. They exited to Morgan Stanley in 2019 for north of $1 billion. Brian is an entrepreneurial executive and provides very strong leadership and board strength for us. We've also recently added George Resnick. George is an experienced tech executive, a CFO with a range of experience in the public space. And of course, we also have Peck Mees, who's one of the co-founders on the board as well. So go ahead.
Like Solium was a publicly traded company, and I met with them, I don't know, 10, 12 years ago. And I thought, well, it's a neat business. But that seems kind of like, how big of a business can you grow managing stock options and that? So I thought, well, it's neat, but I don't see the big picture. And then $1.1 billion later, I missed that boat. So there you go.
Well, it is interesting that some of these problems that you think are niche, that are highly specific maybe to a certain industry vertical, are actually big challenging problems that companies look for automation solutions to solve and are willing to pay a significant premium. So we're excited to have Brian on board. He brings a ton of experience in terms of the successful track record that Solium had, as well as you mentioned.
And sorry, just going back to him, he joined the board, but he also wrote a check coming on as well. He's got skin in the game.
Yeah, absolutely. And he is, he represents a set of investors that have participated in investing in the company, and as you say, has skin in the game, and has frankly a passion for working with growth companies. Solving big difficult problems and building great businesses in that journey. So Brian brings a lot of value to the board for sure. So here's a snapshot of our financial metrics. The one we are focused on is that line under subscription fees. We've seen I think a modest growth over the past reported quarters. Obviously my team's focus is how do we build more momentum in bringing customers, into the Katipult family? How do we innovate the product that we can expand our footprint with our existing customers? Or really, how do we drive that revenue and build a great business for our employees, our customers, and our shareholders?
You've got, as you said, as we discussed, you've got $3 billion of this, whatever, $1 trillion worth of private transactions. So it's a small portion, but at the same time, you've got a couple of very big clients on board, Raymond James and Canaccord, and you're doing almost, let's say, close to $500,000 a quarter. That's solid, but to get it up to like $2, $3, $4 million a quarter in that like to get it 10 times the size. What is it going to take? There are only so many Canacords in the world and so forth. So could you talk about scaling it, what it's going to do, and kind of what's the rate limiting? Like, do you have to hire a whole bunch more implementation people, or now that the base platform's done, you hope to get sort of positive momentum as more people see the value and get more comfort that these big players have it?
Sure, it really is that, I think the key word that you mentioned, Martin, is scaling, and that's really what the focus is. So if you look at our story and our history, the big investment to date has been in the technology and the platform, validating it with some benchmark, high profile, endorsing customers. The next phase of the Katipult journey is about scaling and growth in terms of serving a broader market. I mentioned, the target customers in this space in Canada. It's a fairly limited market, about 35 firms or so that would fit the profile of the target market. Much larger in the US, north of 1,000, target companies. And so what we are doing in our plan around, how we move forward, what our focus is for 2022 is really around building up our go-to-market muscle and capacity. So, one of the executives we hired, Steve Smith, joined us at the beginning of this year. He has a mandate, of course, in working in collaboration with the rest of the leadership team to really build our execution and our focus on getting in front of prospects and customers in the US. So the investment for us is really about expanding our voice and our message to those customers. We will, always continue to innovate the platform and the product. I mentioned, shrinking the time it takes to bring customers on board, but the bulk of that work has been done. Really, the focus and the investment for us is to build our profile and our customer set in the US. One of the great things about the US market, frankly, my experience, and certainly, my past experience before Katipult, and even what we see today, is technology adoption and decision-making cycles in the US tend to be, shorter than their counterparts in Canada. Canada's a little bit more conservative when it comes to technology adoption. So we feel confident that, if we can endure the sales cycles and the process here in Canada, we get our game together, get some momentum in the US, we've got a great growth trajectory in front of us.
And as you were saying, your deal is with Raymond James US, the sort of the head office, not the Canadian operations, which I think is a pretty marquee client for the US market. It's a pretty solid mid-market dealer down there.
Indeed, very, very big brand. The process and the journey to bring Raymond James on, is a test for the business, and we're excited about the momentum and bringing them on board is brought to the business. So yeah, I'm proud of the team's work in that. It's not an easy one to serve and tackle, but we view this as a great endorsement for us and an opportunity to build on that momentum into the US. And I will say, the company's heritage in crowdfunding and the alternative investment space and serving other global markets. We do have customers in other markets, other jurisdictions. So we feel very confident about tackling the US and looking, strategically at opportunities in other markets, in the years ahead. But really our focus is on, building on our momentum in Canada. We've got a very healthy pipeline of prospects in Canada, but really turning our attention to building our profile and customer set in the US.
I would think, given how small the Canadian market is, and you've got some of the leading names already on board, especially on the terms of the guys who do private placements and so forth, I'm guessing that your mesh network is going to have a strong network effect, and that once the other dealers see it and it's like, oh boy, this could really help things out. I would think that network effect is going to take longer in the US as you could get 20 companies in the US and it's hardly a drop in the bucket for good and for bad.
Indeed, and frankly, one of the things that we're interested in and we're looking at is how do we use the mesh network to create more cross-border deal flow. So Canaccord Genuity, certainly a huge brand and profile and presence in Canada, but they have, you know, a pretty meaningful operation in the US. And there are, you know, what's driving the mesh network is the demand and the interest from investors to participate in not only just domestic deals, but deals, you know, outside of their jurisdiction. And, you know, the Canaccords and the Raymond James, they recognize that, and that's why they're interested in our capabilities around the mesh network. It's not just dealer to dealer connectivity. In many cases, it's, you know, a dealer that has multiple geographies, or an investment bank firm that's got, you know, a footprint across geographies that want to stimulate and satiate that demand for alternative investments from their investor communities.
And dealers, I think, are, and just kind of, I'm trying to formulate the thought here, they're kind of frenemies. They compete, but they also, hey, we got a syndication we're going to share with you, and quid pro quo, you're going to share with us. And while they'll headhunt each other, if you can get the other guys on this network as well and improve everyone's workflow and make the syndication deal easier, that's a win for everyone. It's not like, I don't want you on this platform because you'll reduce your costs. You know, I want you on there so we can syndicate easier and partner and that, I would think.
You nailed it. Absolutely. The equity capital markets teams for these various brokerages, they need, you know, quote, their competitors to participate in the deals. They can't fulfill the book or meet the demands or fulfill the, you know, the full capital requirements of a particular issuer. They're used to, you know, working with their syndicate partners. And yeah, frenemies is a good term. And, you know, frankly, that co-syndication process is messy and cumbersome for brokers to work together on, and that's a critical problem we're solving with mesh. When, you know, we see a huge demand and interest in that capability and that technology.
Right. On your balance sheet, last quarter you had about $3 million. Looks eyeballing, you're burning about $100,000 a month, something like that. Am I in the kind of right ballpark there?
Yep, that's pretty accurate. You know, there's some fluctuation in that number, but it's been pretty consistent. You know, we try and be prudent with our cash management, and yeah, we've got a capital runway today that takes us into 2023. We'll look for opportunities to go to the public markets, the capital markets in, you know, the late stage of 2022 to ensure that we've got a balance sheet and a level of investment capital that we can continue to grow and build our business. Yeah, I think it's one of the strengths of the company. I think we are, you know, a lot of tech companies have a reputation of, you know, taking in a lot of capital and burning through it. We're pretty, you know, prudent and manage our capital very tightly, and you know, we'll continue to do that.
Should we be expecting a rise in your burn rate? You just hired a VP sales, and is his job to hire a whole bunch of salespeople and kind of grow that side of the business, which it takes a while for them to gain traction and turn their salary into revenues and so forth?
Yeah, we are, as I mentioned, we are shifting our focus in terms of our investment into go-to-market. You know, what's great about this space is it's very well defined in terms of the target customers. It's not like we have to, you know, have a massive sales capacity footprint to cover an absolutely massive market. We can do that with precision. We can do that with efficiency.
Well, so yeah, what you're saying is, you know, exactly who your your clients are. There's a FINRA list of all the dealers, and that's your client list. That's your target list.
You got it. Yeah. So while we are increasing our investment there, we can do it in a very astute and efficient manner.
Okay, so there will be some. Are you implying that there'll be a little less burn on the R&D side and a little more than on the sales and marketing side?
I think we have an appetite to continue to innovate. So I don't think we'll see much of a drop off on that. We've got a plan that enables us to fund the operation through this 2022 period, which does include an expansion in our R&D capacity plus an expansion in our go to market. But again, we'll do that in a prudent, responsible way. But certainly look to increase our investment there.
Okay, perfect. That makes sense.
So, I mean, that's the conclusion of, I guess the last slide here is just the capital structure, 71 million outstanding shares fully diluted because we have two debenture instruments, fully diluted, 110 million shares. And so that's kind of the snapshot. The ticker symbol is FUND on the TSX Venture. I mentioned, if people are interested in this, our investor presentation, feel free to visit katipult.com. You can download it, review it. We're really appreciate the opportunity here, Martin, to tell the Katipult story. My contact information is here available. I'm happy to take any calls or emails about the opportunity to invest in Katipult, and excited to partner with you and have an opportunity to tell our story.
Well, thanks, Gord. And I guess one final question I'd like to wrap things up with is the news flow coming over let's say through the remainder of 2022. I'm guessing hopefully a bunch of client wins, some new product launches, I guess the launch of the mesh network. What kind of type of news flow should we expect? And is there any M&A opportunity or potential with you guys, or are you just really, you've got what you need in-house and you don't really need to do any M&A?
Yeah, so on your first question, we've tried to ensure that the market hears the major milestones that we're hitting. So things like new product capabilities, enhancements, delivery of new features, certainly will be part of what you'll hear from us in 2022, as well as the continued success that we are having in adding new customers, but also some of the major milestones with existing customers. We get excited when we achieve milestones. We released an announcement with Canaccord Genuity where we hit the $500 million mark in terms of deal flow with them. And so we'll be tracking and reporting on our activity and measuring and hopefully sharing that news. In terms of M&A, we think that this is a market that today is looking for a full set of capabilities from a single vendor. Our focus is to continue to serve the market, to refine our product, to deliver this capability. We're not pursuing a particular acquisition strategy on either side of that. We think that the market is there for us, and we're very, very much focused on serving what we think is a really interesting and valuable market.
Right. Well, that makes a lot of sense. Gord, thank you very much for taking the time to talk with us. That was a good explanation of the business, and it makes a whole lot of sense. So thank you very much. And I'd love to get you back in a little while after you knock down some of those milestones and see how things progress. So thank you very much for taking the time to chat with us. Have a great day and talk to you soon.
Thank you, Martin. Appreciate your time.